What's up, YouTube? This is Don Freeman coming to you again with another one. Had another kind of trading sideways week in the market today. This whole week, and just wanted to get some information off my chest on the guys on all the different internet YouTube talk about diversifying your portfolio, which I do try to do, but being that I'm a little older, I'm always trying to get stocks or ETFs that are going to pay me a good cash flow along with having some growth. So I want to talk about some of the stocks that I get that do that and try to still have diversity. Um, One of the stocks that do that for me, I have it's a stock that's kind of Europe, Asia, and some other foreign stocks. And so that stock is what stock was that again? EFAS. And so it got a nice little dividend. I'll open it up here. Um, it's basically kind of your average high yield. Um, it does about right now with a down market. It's giving me 6.8% on the yield. And so, if it's a good market, that yield will be a little lower. But anything over 3%, people would say is a very high yield. That gives me a little diversity of having stocks that are not all part of the United States stock market. It pays me out halfway through the month, which is good for me. Um, I'm going to continue to add to that. I have 10 shares right now, but of course, like I said in the previous video, this was one of the stocks that I used to pull some money back from to help take care of some bills that I had coming before. Um, I do have a ETF that deals with a part of the stock market that is very broad, which are the small capitalization companies. And I believe these are companies that are in and around like $10 million in revenue. And so this ETF, its yield is also it's a little higher than average right now. Its yield is 7.45%. And so that's on the high side. But of course, because the market is down right now, there's so many that are currently just high yielding right now because of the way the market is. Going back, of course, I told you I have a couple. I just picked up Jeppy this month, but I have 3 different types of ETFs that do the covered calls for you to generate the cash. And so Devo and Jeppy both hold their value really well and Jeppy gives you a very high yield. If I take a look at it where it's at right now, because I'm thinking it's well over 10%. Yeah, it's yielding 10.74%. And so that's pretty good. It's usually a little higher, but I think it's kind of done well in this beginning of the year and kind of regained some of its value. Another, of course, a certain amount of stocks that I have are some of the real estate REITs. I was reading in my book back here that you got these different type of REITs for different reasons. And I have a REIT that basically it mostly does mortgages, but I just picked up I have 4 shares of Sixth Street Capital, which their ticker symbol is TSLA or TSLX. And I kind of read up on them. One thing I noticed about them is if you're looking at their history on their dividend, it's kind of all over the board. What they kind of have been doing, and I think that, which is really good, is they're adjusting their dividend for what their earnings are monthly, and kind of having a very particular style of management with their investments. And so they're yielding right now 9.5%, and so that's going to be a really good one for me. And matter of fact, if I look at my history, I have a dividend coming up of $1.84, and so building on them is going to be very helpful for me. That's going to be at the end of the month. And like I said, I have many stocks that come in right in around the end of the month. I would say probably five or more of my stocks or ETFs are set up to hit near the end of the month or the first of the month. So I try to not get too many of those. I mean, I'm going to certainly try to build up the shares because that's what you want to do. But certainly I want to try to balance out my portfolio to where I'm getting payouts, every week of the month. Going back, of course, I have some mortgage REITs. I just got back to buying AGNC. And AGNC, I currently have 4 shares of that again, and I'm going to continue to build that one up. They are currently yielding, which is rather high, 14.7%. But, luckily for me, I sold out of it around December so I could take care of some bills. And so, and some of its depreciation, I missed some of that, so good for me. But certainly I liked what I've been hearing about them, and I see them as a good way of building some income and building a way of having a first of the week kind of time frame of having a dividend come in. Again, I have lots of financial stocks that are business to business stocks. I also picked up a holdings company, and it's been a while, but they gave me something on Robinhood, which are called warrants. So I got 7 warrants from them. But I think eventually they're going to try to, I'm not really read up on warrants, but I think that's going to try to turn into a stock or a common share of the stock. So I'll look that up and get back with everybody about that. If anybody wants to know about that, just let me know, comment in the section below. But, that was good for them because I think, and the ticker symbol for that is EFSH, and they basically are a holdings company. It's called 1847 Holdings, and I think what they did is they cut their dividend, and because the stock went down a lot, their yield has like tripled. Their yield is at 53%. So that's just one of those situations that most YouTubers will tell you you don't want to get into anything that's high yielding. But this stock is actually a relatively new stock. I think it IPO'd within the last year and a half. And so I think what it was is its value started out at around, uh, I want to say they IPO'd at $1. It jumped up to like close to $4, and now it's back down to 96 cents a share. So being that it's new, I'm gonna just continue on and see, how well the company's managed. I don't have a lot of money into it. Um, Basically, if I look at my market value, I have 112 shares at a market value of $107.53. So, you know, there's sometimes you want to get into a stock and see, where it's going to go. Everything has risk to it. That's what you're in this for, is to, you know, weigh the goods, the pros and the cons, and see, you know, where your portfolio can take you into the future. Like they say about the stock market, it's historically gone up 2 to 3% over the years, and that's not every year, but that's an average. And so certainly, if I can get this stock to do the same thing, that would be very, very helpful and lucrative to me. Um, I forgot about one other real estate REIT I have. Uh, I have 34 shares of the Orchard Island Capital. Uh, Orchid Island, they are a real estate REIT. I think they're like half and half mortgage, and I want to say half and half mortgage backed securities. And then they have some pass through, they call them RMBSs, and they have structured agency RMBSs. And I guess that's basically they're taking on some of the debt of other securities mortgage. And then they have a small amount of interest owed to them from previous uh, collateralizations of mortgages. So, certainly I wanted to look at my REITs and think, I got a couple of REITs that do mortgages. So I wanted to add Sixth Street, because Sixth Street, they're into owning a lot of their assets. And so, I wanted to kind of take one sector and kind of look at it and break it down and say to myself, um, you know, it could be diversified a little bit more by the way the companies make their money. Um, and certainly when I looked at having a holdings company, I wanted a holdings company because they effectively make their money by helping other companies make acquisitions. Um, you know, they give, certain types of, what I want to say, holding areas. I don't want to say it's like a tax shelter, but it's like an asset shelter for the time being when you're looking at different companies effecting a merger or doing, some type of partnership or business versus some of my other ones, business to business companies like Prospect Capital, who basically invest in businesses that have a certain market cap value. Um, and so certainly I got a couple other ETFs for income. I think I mentioned before I have the YYY, and that's basically high income ETF from Amplify. Um, their yield right now is they're yielding 8.2%. Very, very steady. It's kind of a high yield, but that's a stock that I have a lot of money into. And then, they're set to give me a dividend at the end of the month. I think it hasn't popped up yet, but if I look at what I got the last month, my last month I have received $27 as a monthly dividend from that one. So, certainly I think I picked up a couple more shares for that one this month. Um, that's just the name of the game. If you're a dividend investor, continue to add shares. What I'm doing is I'm dollar cost averaging, as they say. You know, I try to, when I find it's down, make my purchase because that can help. But generally over time, you're buying it when it's high and when it's low. So that was one thing I wanted to talk to you guys about today. I want to say there wasn't a lot to talk about in the markets besides uh, Fed Pal came out and talked about, continuing to keep interest rates going up, even though, everybody was scared of what happened with the banks. He kind of assured us that, the U.S. market hasn't, applied any of our interest rate money or FDI money towards bailing out the banks, I believe. I think what they said is, they're stepping in and using some, I want to say it was something different. I have to look it up again. But, it's not basically what I'm saying is it's not a bank bailout. And that's one thing that we wouldn't want to see is, you know, the government taking on all that debt and bailing out the banks because you're talking about billions of dollars on top of the fact that, the U.S. has a deficit anyways. Plus, we're giving money to support Ukraine, and you know, that's not something that's sustainable. So I think that was all my thoughts for today. If you have any comments, please give them to me. I read the comment section. Um, I want to get some information from people and find out what's on their mind. So like and subscribe and leave a comment, and I will see you on the next one. Hey, wanted to jump back on here, YouTube, in the video. When I was talking about the warrants I got awarded, I forgot when I looked it up. The warrants, they pretty much give you an option to buy the warrants that they're issuing you, maybe with a put or a call option to get them in the future or to sell them in the future. And so that's one thing I wanted to make sure we got that right. So I wanted to tap in on and let everybody know that. But certainly that's a good deal because, certainly if it's a common stock, that may be a better situation on, getting the dividends, in bad times before, other regular stockholders. So I just wanted to get back in on that one and let everybody know that that's the situation with that. So just keep in touch with me, and I'll see you in the next one. Peace.